Well, good morning, ladies and gentlemen. Welcome once more to the FT Studios for the latest instalment of the PWM Expert Series in association with Generali Investments. Today we will discuss opportunities in convertible bonds with my special guest, the lead convertible bonds portfolio manager from Generali Investments, Brice Perin.
Oh.
In this first chapter, we're going to talk about the basics of convertible bonds. I'm sure many wealth managers come to you, Brice, and say, what exactly is a convertible? Is it an equity? Is it a bond? It's not really like anything we're used to previously. So where does it fit into our portfolio?
Okay, so basically a convertible bond is a mix of a bond with an embedded options to convert in the underlying equity. So that's, as a bond, you can have access to coupons, but you also have the ability to have the equity exposure.
Does investing in a convertible perhaps mean you don't really have the conviction to go with either an equity or a bond, and somehow you want to hedge your bets and have a mixture of both, two for the price of one, essentially?
Yeah, I mean, that's the interest of the convexity of the convertible bonds. You are still confident on the midterms, on the underlying exposure you want to have through the convertible bonds. But thanks to this defensive profile, if things go wrong or if there is volatility in the between, you have a protected instrument. So that's, in my sense, makes the beauty of this instrument.
And are convertibles necessarily just as much about neutralizing and reducing the risk as they are about searching for returns?
On long run, many studies demonstrate that with convertible bonds, you will have very similar returns at other risky assets, as equity, for instance, but with a lower volatility. So yes, for sure, holding convertible bonds will reduce your risk for that reason. Regarding the search for yield, that's an important point because people are sometimes a bit confused by the negative yield issued by some convertible bonds issuer or the low coupon rates. So again, we are no longer in a pure credit environment for convertible bonds, where you are buying some convertible bonds just for the carry. Now what makes the value of the convertible bond is the convexity. So it's that ability to benefit from upside, but with a defensive profile. So I would say we switch from a more credit defensive, pure search for yield to something more convex, like I would say, yeah, edge equity or something like that.